Good morning, all, and welcome to this morning's video. I hope you had a fab weekend. I have three pairs on watch this morning. Those are pound dollar, euro pound, and euro dollar. Of course, it is a bank holiday here in the UK today, so it's likely that a lot of these entries that I'm forecasting may take, particularly the pound ones, may take until tomorrow to shape up, if they even shape up at all. But I'm back and I'm making these videos again. I didn't have any pairs on watch for a little while because the market was very, very corrective. So I was just letting the market develop, which is why I've not been making any videos. But now the market is starting to show its hand. And one of the reasons that people lose money in trading, as I've said in the past, is not that they don't know what they're doing in some cases. In many cases, people don't know what they're doing, but in some cases, it's not that people don't know what they're doing. It's just that when the market is consolidating and it's in these choppy, messy ranges, people can't help themselves but get involved. Okay. And then they give back any profit or all of the profit which they may have made. Okay. So that's why you'll see me take a step back for a day or two, or sometimes a little bit longer if the market is doing what it was doing last week, because I'm not interested in FOMOing into positions because the market is not doing what I would normally anticipate it doing. Okay. Not trading is a trade with not taking a position is a position within itself. Okay. Always remember that. Always keep that front of mind. So pound dollar, my favorite of the bunch. So I've got pound dollar, which is a low risk position, and I've got a couple of higher risk positions, but I should talk about that when I get into the entries. So you can see here we have this sharp move here. We have this complete washout. We break below, completely wash out all the orders, and then move to the upside. Okay. So at this moment in time, I'm not seeing any reason why price needs to come down to these areas because we've already washed out that liquidity. Okay. As we zoom in to the other pieces of the puzzle, we have a structure here. Okay. We have this structure here with 1, 2, 3. We tap just below this low, catch people the wrong side of the market and push up. So I'm not seeing at this moment in time any reason for price to come all the way down to here, because down to this low here, because this is a completed piece of structure. Okay. We then have a bit of a near miss, not really that much of a near miss, but we have a slight near miss to this low, but we have a near miss here, just to touch on it. So we have this low here where there was a sharp move and we near missed to it. Okay. It was also the retest of the back end of all of this. Okay. And it caused price to smash through this brick wall. Okay. And continue higher. So this may be an area of significance. Okay. Particularly as we near missed to it. Okay. But as we zoom in, so you can see that after that, the other clue is that after we near missed to here, okay, we come up to here, we have this exchange, this consolidation here, and we get to that by way of a reversal structure. Okay, we have the middle section, 1, 2, 3. We have the 3 drives: first drive, second drive, the third drive, which, as I've said, usually breaks above on the higher time frames if we're going to move to the downside, which perhaps explains why this high here, if I just zoom in a little bit, why this high here just wicked to this area. Normally we have to break above before we see the bigger moves to the downside. Okay, we then do see a very direct move to the downside, or quite direct move to the downside. We then break just below here, which was kind of the retest of the back end of this running channel here. Okay, sharp move down, sharp move up. We break below, catch people the wrong side of the market, and then push to the upside. So perhaps we don't need to come down to test these lows after all, and perhaps this just is just a 1, 2, 3 to take us up to these areas, because then that would give us more of this kind of parallel structure there. But even with that being the case, there may be a little shorter term move to the downside, which we could capitalize on in the meantime. And the reason I say that is because we have a consolidation here. You can see this consolidation, and that caused price to smash through all of these lows, okay, suggesting that there may be a lot of liquidity here. And we can see that there was, because we wicked above, washed out all of the orders, and then pushed to the downside. And you can see, if I just drill down, so I'm seeing this is a washout of liquidity of all of the orders that were just above here, and we know that this consolidation caused price to smash through all of these brick wall lows. Okay, as we zoom in, we see the same thing again. We see the three drives. Okay, we see the first drive, second drive, third drive, and then we have that reversal structure. Okay, we near missed to that area. That was a good clue that there was liquidity here as well when we near missed to it. And then we have this kind of middle section there. Okay, we know that the leg out of if we just measure the height, I'm measuring the height of the middle section. Okay, usually price will move a similar distance to the upside. Okay, or maybe slightly more. We've fulfilled that now. Okay, we've moved impulsively by the same amount as this middle section was high, if that makes sense. Okay, bear with me. Once you've seen these things a lot, you know what you're talking about, even if you can't always explain it. So then we have the other thing that makes me think that we may be headed for a move to the downside, a short-term move to the downside, is we have a near miss to this low and a near miss to that low. Okay, and if we just measure this, I'm going to measure it from this low here to this high. Okay, this low here is bang on 50%. So if we are going to move to the upside and take out that higher time frame target that I was talking to, perhaps we're coming down to this 50% mark down here. And we know that sometimes euro pound, pound dollar. Sorry, I thought I was analyzing euro pound for a minute. Just ignore that comment. That would be a 50% pullback. Maybe we're getting something like more like that to then move to the upside. Okay, so that low there is of significance. Okay, more so in my opinion than this one here. So as we drill down, we can see we're starting to consolidate. And if we had an impulse correction continuation to push lower, and the impulsive leg was to replicate itself, okay, that would also take us down to this low as well, okay, that I was just talking about. And if we just look on the 15-minute chart, we have a sharp move up followed by a sharp move down. What have we done? We keep near missing to this area here. Okay, so what I'm seeing this as potentially, which is why I'll be looking for it today. Let's just get all of this jazz off the chart. What I'll be looking for is the following: either a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with a 3-touch structural approach. So by that I mean, what we might get here, we don't really have a base, we have a kind of first bottom. What we might get is something like that, which gives us a bit more of a base, and then we come up to those areas to give us a 3-touch structural approach like that. Okay, 1, 2, 3 leading up to that. I would look to get short. This would be a 1 hour structure. Okay, and what I would do is, once we got a 1 hour close in this area, I would then drop down to the 15-minute chart looking for rejections of this sharp hook point, and then I would look to get short on this pair. And what I would do, I would measure from range to range. I would measure from that range there to that low, and I would set a take profit at the 90% area, which is where price tends to pull back deeply. Okay, and I would trail my stop loss accordingly, and then I would have about 2.5% down to the low of the consolidation, and then about 7.5% down to that low. Again, this may take a little bit longer to form, if it forms at all, because of the fact that it is a bank holiday here in the UK today, but we shall see. I have an alert set just below that little sharp hook point, which I showed you on the 15-minute chart, and if it does not trigger, then I will not be looking to place a trade. So that is pound dollar, and that would be an example, in my opinion, of a low risk position. It wouldn't make logical sense for price to give us this and then to just tag me in and then tag me out and move to the upside. That's atypical. Okay, so that would be an example of a low risk position. So euro pound euro pound, if we just zoom out, we can see. So we have this little area of we have this area of consolidation here, okay, where we had a big sell-off from that area last time around. Okay, price moved impulsively down from that area, and we got to that area by way of a reversal structure once again. Okay, parallel, first drive, second drive, third drive. People who trade trend lines would have been confused by this because they would have seen it break above. They would have thought it's going to keep going, and then it comes straight back down, which is what we typically see. So we have the middle section there. We also tapped into this little bit of consolidation here. Okay, so we've washed out a lot of liquidity there, and then we've moved to the downside impulsively. Okay, what do we also have? We have these lows. We have a near miss to this low, a near miss to that low, and a near miss to that low there, okay? Increasing the likelihood that we're going to come back down. We also have this element of a head and shoulders pattern forming with this kind of left shoulder, head, right shoulder. Okay, that's another tick in the box. You can see that we're pulling back about 50% of the range. That's another tick in the box. And if we just drill down, you can see we kind of got this scoop. This is what we call our kind of V shape, if you like, a V shape pattern. We have some consolidation here, and there was enough liquidity there to cause price to smash through this low and smash through that low, suggesting that there's a lot there, okay, and we may react from the area. So we don't always need to get these, a structure like this, for example, which gives us that, and then we move to the downside, however that is possible. Okay, so that is a factor in my thinking. So we've kind of broken just above this area, okay, but at the moment we are consolidating. So, and we haven't really pushed down. We haven't pushed down aggressively. However, we responded from that area. We've moved down correctively. Okay, so that may be once again because of the bank holiday. So this could be, okay, something like this. So because it could be something like that, which taps into this sharp move, which is sat just above, which could be, if we just measure it, that would be just over 50%. And euro pound does tend to pull back slightly more than 50% before continuing in the forecasted direction. So I'm mindful of that. So this would be what I'll be looking for today, just to touch on it first of all, is I'll be looking for a solid impulse down for the market to show its hand, a consolidation afterwards, and I will be looking for a two-touch 15-minute consolidation, not a 5-minute consolidation, just because we have that sharp little hook point sat just above, and then I would look to get short on the break of the flag or within it, and then I will be able to manage it down to this low here for something in the region of 3.3, and then I would once again, in this case, what I would do is I would measure from this range down to here, and the 90% area would fall just below this sharp move. Okay, so I'd actually, in this instance, I would actually just set a take profit there, okay, rather than setting it just below. And then I would, excuse me, I would trail my stop loss accordingly, and we would have something in the region of 5.87 to work with, okay? So one of the reasons this is higher risk is because it wouldn't look unreasonable for price to tag me in, tag me out, do something like that, and then come up to that sharp hook point, which we near missed to, and then move to the downside, because often price will replicate to the right what it has done to the left. And you can see, if you look at that, that wouldn't look unusual to me. So therefore, this is a higher risk position. That's how I grade my positions. So I've set an alert just below this consolidation to see if we get that impulse down. But as I said, I wouldn't be surprised if this just chops around sideways because of the fact that it's a bank holiday, in part because of that fact anyway. So I wouldn't take this position unless I was in profit by 2% for the month. I haven't placed any trades this month so far. So therefore, pound dollar most likely would need to give me an entry for me to be able to take this position in any case. A position, it would not need to give me a trade that puts me in profit by 2% for the month. Okay, so that is euro pound. Another slightly higher risk position in my opinion and experience. So euro dollar, you can see it moves obviously a lot like pound dollar, but pound dollar has just been a bit more direct. Okay, so euro dollar, we have this, we break above this high here where there was consolidation, catch people the wrong side of the market. We then do a similar thing here. We have this high here, we break just above, we move down. Okay, but it's moved down. It's not been the most direct move. We get more direct movement here. Okay. However, I am mindful of the fact that we have already had this 1, 2, 3. Okay. We have this 1, 2, 3 there. Do excuse that drawing. We break just below this consolidation, which had enough liquidity there to cause price to smash through all of these highs. Okay. And so what this could be, this could always be volume accumulation for the next move up to give us that kind of structure. Okay, so I'm mindful of that. But what have we done? We've moved up. It's still moved up quite correctively all in all. And we've had that kind of washout candle that we saw with pound dollar. Okay. And if we just look here, we have a similar thing. We have consolidation there where there was enough liquidity to cause price to smash through this low here. And we have that structure again. We have a reversal structure. We have the middle section. Okay. We have that middle section there. We break out. In this instance, we're floating above. So I wouldn't take this because we're floating above these highs. We have the near miss to the high there. Because we're floating above the highs, there's always a chance, if I just drill down, especially when we have that wick there. Whoops. There's always a chance that this could be, you could be tagged in. So you took something here, tagged in, price reacts from that wick. We then get something like that. Price comes down, and then this becomes a bull flag to push higher. So in this instance, I'll be waiting for price to show its hand and break back below these highs here. I am also mindful of the fact that this correction is very wide relative to the move down which has preceded it. That also increases the likelihood that we move up to test these highs and potentially move a lot higher for the reasons previously given. Okay, if we just look at, yeah, that makes much more sense. So what I'll be looking for in this instance is I'll be looking for price to break below here. If we did break below here, there's not kind of any highs sat just above this high here, as there was with euro pound. There was a little high sat just above. We have that little high set just above, which is why I was waiting for a 15-minute continuation. But if we break below here, then I would be quite happy with a 5-minute continuation, and then I would look to get short on the break. Or if we got that 15-minute correction, so 6 to 8 corrective 15-minute candles, then I would look to get short within it or on the break, and then I'll be able to manage it down to this sharp low there for something in the region of 2.9, 3.9 there, and then I'll be targeting that low there, okay? And that would give us something in the region of 6, and once again, I would measure the range, and then I would likely set a take profit, probably. Yeah, I'd set a take profit. That's not a sharp move there, so I'm not worried about that. I would set a take profit at that 90% area and then trail my stop loss accordingly. So I have an alert set just to see if we can break back below these highs here. And if we don't, then I'll not be looking to place a trade. The reason this is higher risk as well is because even if we get this, price could still do that to fulfill this move here, okay? That still wouldn't look abnormal to me. So therefore, this is also a higher risk position just because of this overall, this overall corrective move down, okay? If it was more direct, then that would change the picture a bit, as you can see with, we kind of had the same thing here with pound dollar, but it makes much more sense for pound dollar to move to the downside than it does euro dollar. But anyway, that's what I'm going to be looking for today, folks. I hope you've enjoyed this video, and I will see you again in the next one. Thanks very much for watching.